post the recent rally in the markets that we've had for the Nifty as well as the Sensex, rising almost 50% from their March lows. If you have a look at the valuation picture right now, it may appear on the lofty or on the more expensive side. Now let me just highlight for you that Nifty's price to earnings ratio on a 1-year forward basis has climbed to as high as 21 times. Now this is a record high as far as valuations for the Nifty are concerned. Why is that so? Is primarily because there has been a slew of earnings downgrade that we have seen from the analyst community itself. But coming back to the lofty valuations that I have been referring to, 21 times, just to give you a historical perspective of how high that is, the average since 2005 has been 15 times. One standard deviation above the average line has been about 17.5 times, and two standard deviations above the average line commands at 19.5x valuation. There has been just one instance in the last or since 2005 that the Nifty has traded above two standard deviations above the average line, and that was way back in 2007-8. With the current valuation picture, we have not only surpassed the pre-COVID level that we saw late last year, but we have also surpassed the 2007-8 highest valuation that the market actually commanded for itself. And we are very close to the 3 standard deviations above the average line, which is at about 21.7 times. And the current estimated price to earnings multiple for the Nifty stands at about 21 times. Now, why is that so? Like I was telling you, this has largely been because we have seen a slew of earnings downgrades from the analyst community. So mapping how the earnings picture actually looks like, or how the analysts have revised their earnings estimates downwards. Since the start of this calendar year, analysts have revised their Nifty EPS down by as much as 17%. And since the beginning of this current financial year, which is 1st of April 2020, analysts have revised their earnings estimate on a 1-year forward basis by as much as 25%. And this is largely led by the financial space, while on the other hand, the sectors that have seen significant upgrades have been the healthcare as well as the IT sector. But like I was mentioning, that the valuations actually look on the lofty or expensive side. That is primarily because of the earnings downgrade that we have seen, and the prices actually rallying about 50% from their March low.